Thanks for those that are joining us. I'll dive right into it. We've got British American Tobacco, BATS. So just to start off, we'll tackle the macroeconomic environment in terms of the cigarette business. Obviously, we know that cigarettes are in perpetual decline, not only in the US, but globally, but specifically in the US, where they're seeing high single-digit declines per year, that is, in volumes of cigarette smokers. And recently, more highlighted by management is the rise in illicit cigarettes and vapes, more illicit vapes than anything, of which they predict about 60% of all sales in the US now go through illicit channels. As I just touched on, the US cigarettes saw high single-digit declines. That is attributed to people just not smoking anymore or switching over to vape or tobacco-heated products. From a valuation point of view, that has obviously come well off its highs and is trading at well below its long-term multiples and at quite a discount to Philip Morris. On December the 6th, they released a trading update, of which they just gave a heads up of what's happened in the fourth quarter and a bit of guidance through for 2024. They stayed with their guidance of 3 to 5%, but they amended that slightly in terms of they expect it to come in at the lower end of the 3 to 5%. So we can only assume that's closer to 3. And then there was, in the earnings call, there was just quite a bit of visible frustration from the CEO on not only the Food and Drug Administration's action, but as well as their inaction. They seem to be taking quite a hard stance on the official players in the cigarettes and vape space, but then they're also not clamping down on any of the illegal channels that are not only hurting the US tax base, but also hurting Philip Morris and British American Tobacco and Imperial Brands and the likes. They were hoping to see a bit of a share buyback being continued, which they paused a while ago. But it seems like management wants to focus on the debt that they accrued over 2016, 2017, and it's currently sitting about 2.7 times. Their target is 2.5, so it's not far away. And at that point, they'll consider returning capital back to the shareholders. And we can see it's currently sitting on quite a high dividend yield of about 10%. They also mentioned that they're writing down their US cigarette business by about 25 billion pounds, which is quite a lot. And that's due to the fact that it was previously recognized in the books on an indefinite lifespan, and now they are reducing that to 30 years. They don't see cigarettes will be gone in 30 years, but it's just prudent to start amortizing that on the books. So it's a non-cash item and will be reflected this year in the EPS, but on a normalized basis will have no impact there. We've got a recommendation of buy with 38.5% upside. That's on the pound price. And then I just put in there some easy wins. It's not, and I put easy in brackets because it's not that easy, but essentially what they can do to boost or help out shareholders a bit is possibly changing their listing from the London Stock Exchange to America, where they do most of their business. So it makes sense from that point of view, and that will allow them to be incorporated into the S&P 500 index. And then you'll have index tracking funds buying the shares. A possible sell in their stake of RTC, which is not easy, and then share buybacks at current low prices, which would make sense.